on the euro dollar again today in New York session. A lot of people a little confused as to what happened, so I wanted to hop on and go into depth on every, not every move, but why certain things occurred and why certain things weren't respected. Okay, so on the hourly here, we'll rewind this to where the day was all finished up, essentially right here. Okay, so first, what do I see here? This is what I had marked out initially, right? Simple stuff. Sellers induced, printed the low, took the highs, okay? Now, I saw this as a possible target to short into, okay? We'll explain why it didn't end up working out, but we'll get there. Friday, printed a high in New York, grabbing that liquidity, and we had that sell-off, pullback, took out this inducement high, mitigated the 5-minute liquidity block at the extreme, right here, and then we moved away, okay? Traded away. What did we do before we took out these lows, 1 and 2? We printed a inducement high. Okay, so we're just following along with the story here. Now again, what is the logic behind our liquidity block? Essentially, there's no liquidity above this high right now, right? So that's why if I drag this across, price respects this area, that liquidity block, takes the inducement high, mitigates the liquidity block, and we get a sell-off. Perfect. Now where do we sell off to? Right to this low, and we start building liquidity at the low, right? So for about hour and 30 minutes, we were trading at the low, finally spiked through it. Okay, we grabbed that liquidity. Now, essentially, we don't have really any liquidity above this high, right? Because we just spiked above all this, took that out. Okay, so this could get respected, which ends up getting respected, right? So that's why there was no liquidity above this high. So that's why we respected it here. Okay, so going back a little bit, this is in London. Again, we take the low and we trade higher from here. We get a reaction up, respect the highs, get a low, and take them out. Now we get a possible inducement low printed for us here. Okay, which I know a lot of you are buying below, and we'll discuss why it ended up didn't working out, but we'll get there. So we traded back up to the highs, okay, and look how we before I get there, sorry. Okay, from this low to this high, and then we come down, trade below, and take that low out. What does that now tell me? Sellers are interested in selling at the highs. Okay, so we'll go back to like the 15. Sure, this is perfect here. Okay, so price takes the low. Okay, in simple retail price action here, they want to see price at the back at the highs and a continuation down, right? So look how price respects the area initially. We get a false sell-off, grabbing these lows here, right? What does that tell me? Well, now even more sellers are induced. They're going to be selling at the highs. Okay, now we get a move back up and we trap those sellers, and then that's what fuels us for a move back to the downside. But don't forget now, we're still trading within this area, so now we're leaving liquidity at the highs. Okay. Yep. So let's continue on here. Now, what people wanted to see was respect this high, get a pullback, and you wanted to buy below this inducement low, which makes sense. But now you want to analyze current price action. So you can see as we're trading lower, print this low, high, sell off more. Now we're starting to respect this inducement low. Okay, building that liquidity. Finally, we take it, and look what happens. Price trades up. Oops. Induces sellers, right? Sellers from high to low, back to high. They want to see that continuation. So it gives them the reaction, all right? Induce sellers, trades back to the extreme, mitigation of the extreme, and then we go bullish and grab that seller liquidity, okay? So we trap those sellers, but not only do we trap sellers, now we have now induced buyers, thinking these highs here are break of structures, right? So there's their BOS. They want to see buys down here and here. Since now we've built liquidity here, what can we expect to get taken? This low, right? So we expect a run down below, take out the buyers here. And why did we print this low in the first place? Well, we printed it from this whole area to the left-hand side here. So we can expect this low to get taken. Because if you think about it, if buyers were entering positions here, okay, with their stop below, okay, and they wanted to see a continuation up, look how they get tagged in. Okay, it goes in profit, gives them breaker structures and everything. There's going to be even more liquidity tucked below this low and this low. Price hunts for all that, takes them all out. Now it's time to move away. Okay, and we're still trading within these imbalances to the left. Now we've trapped buyers. What does that now tell me? We can move to the upside. All right, we can expect this to be a trap because this is an inducement high, right? Buyers induced, print the high, take the lows. This should now be a trap. Look where price builds liquidity after. We don't build it before, just a very, very little, sorry. And then we take it, trade back below, and take out the lows. Then we take out the highs, which provides us this sell-off. Now, what I was looking for, if you look at the lows over here, was a simple run below that low. Unfortunately, we did not get it. This was a buying opportunity because since we've also taken this low here, what's this become? A trap, right? Structure, high to low, and then they get the break of structure, okay? They're going to be selling this high here. So this would be their VOS, and they're going to get trap selling here. So what does that tell me? Lots of liquidity tucked below my crosshair here, 715, and also don't forget these highs over here. That's exactly what we hunt for. So unfortunately, I was looking for a buy position right here, like this. Stop below the liquidity block, 3.4. We'll go just four pips. And why the liquidity block? Well, since we've now ran out liquidity there, there's going to be no liquidity below this low. So that's the logic of us coming down, respecting it, and running away. Just to this high. So that was going to be the target. Again, unfortunately, we did not get tagged in. We actually, if you check on the 15, tapped 15-minute liquidity block and then ran. So this would have been the only way of getting involved in the entry. And then it was only not even a 1 to 3 to our intraday target. And then you have these highs to the left, which you could possibly held to, which would have made it a little more of a reasonable trade to take. Okay, so not the easiest of price action, but I want you guys to, I wanted to cover this just so it made sense for you guys, right? I know a lot of you guys were looking at this area to hold, but you got to understand we need to build liquidity first, and the market ran it, use this liquidity block area as a buildup of liquidity, okay? That's why I put the red line here. There's our buildup. We take out the buildup. Now buyers are trapped here. Now it's time to move away, okay? But yeah, that wraps up this study here. Directionally, clean day. Unfortunately, entry-wise, there wasn't too much on this buy move here, unfortunately. But yeah, it's just one day. We'll move on to the next one here. So I hope you guys enjoyed, and I will see you on the next study.